Hilton brings you new ways to stay, with experiences that let you capture the glory days. Introducing the Graduate Hotels. Each inspired by local college towns, these stays are always original and never boring. Get in touch with traditions all across the country and enjoy a stay that's a class above the rest. Book at Graduate Hotels with Hilton Honors Points at Hilton.com. It's a win-win. Hilton, for the stay.
Reality radio for a really great future. We're talking real money.
Now let's join Talking Real Money.
Already in progress. No, not really.
We could use the green room version, which would only be the podcast, could not broadcast at all.
Yeah.
For reasons that are well known.
This is a broadcast about to become a podcast and go down in history as one of the more unusual ones. I'm Don McDonald. Over there's Tom Cock. Say hi again, Tom.
Oh, I'm waiting for the unusual part, but okay.
You are the unusual part. That's what.
Okay. All right.
Yeah, actually, just to let you know, we air our radio show on KOMO in Seattle on Saturdays from noon to 2 Pacific time. And usually, it's just a normal radio show with like musical intros and beds and
weather and traffic and weather and traffic and a little bit of money and weather.
Yeah, and then Don takes the audio and edits it into a podcast, taking out as much of Tom as humanly possible. Well,
I knew that was true. I am glad you finally confirmed it. Anything witty I ever said, anything important
gone,
I ever
gone.
said, it's out.
Yeah.
Okay.
No. Yeah. Well, but the problem is it's not really hard to edit those parts out because they don't exist. So
I got it now.
You got it?
Okay.
Anyway,
10 seconds an hour of something important.
So I don't even know where I was going with this.
I know where I'm going.
I'm old. I've lost track.
Give the number and get out of the way.
We're talking about money, and you're invited to join us at 855-935-TALK. Just call us. If you have a question about investing, we're good at that. If you have a question about anything money-oriented, we're okay at that. If you have a question about Social Security, we're going to work on that. Next week, we're going to do a show, or at least we're going to record one devoted to Social Security. You are going to do this, whether you like it or not. You're doing it, damn it. People want this.
They demand it. By the way, what did Paul Volcker say? I love this quote. The only valuable innovation the finance industry had conjured up in the past 20 years leading up to 2009. What did he say that was?
The ATM.
The
ATM.
The ATM.
Yeah. Which is true. I got to tell you, ATMs.
I just love that quote.
Were amazing. But you know what's better than ATMs?
What?
Smartphones now. I don't ever use an ATM
how's
anymore.
That relate to? Oh, I see. Because you can move all the money on your phone.
Yeah.
Okay. And you can deposit checks on your phone.
I do that all the time.
I know. No, okay. I'm with you there. But where's this headed?
Well, it was headed to that article. It was headed to the article from.
Well, no, it's actually a book.
Yeah, but the article, you're getting that quote. That was that from the book? Was that from Wigglesworth?
Yeah, I think it is.
I love his name.
Wigglesworth.
There's a new book out written by
Robin Wigglesworth.
How British is that name?
Robin Wigglesworth.
I'm Robin Wigglesworth. And I'm going to write a book about money, and I think because I'm such a Wigglesworth, I'm going to call it Trillions, because trillions are bigger than billions, you know.
Well, no, I think Trillions, they said, was a takeoff of Bobby Axelrod.
All right, well, whatever.
Protagonist of Billions.
It's a book I'm dying to read. I've read the review.
And I'm getting it on Monday. I'll take it with me on my trip next week.
I read Burton Malkiel's review in the Wall Street Journal, and this is a book about index funds.
Go about the kind of the birth and the growth of index funds, which, according to Mr. Wigglesworth, now hold about $16 trillion. That's according to Robin, about 40% of the overall mutual funds, exchange traded funds complex.
It sounds to me like we're talking real money.
I think we are. He goes back to 1971. But the point of all this is, as silly as it all sounds, is
it doesn't. It sounds important.
Your money should be in index mutual funds, index exchange traded funds. It should be in some sort of passive-like product.
But why?
Evidence-based.
Why? Why? For what reason?
Because the rest of it is a fugazi. It's a you hope for. Who knows how it's all going to work out if you hire somebody to pick stocks or time markets or all the rest of that. But it's silliness.
The story of indexing is so fascinating. It was an idea that nobody thought of for decades of mutual funds. Nobody thought of it. And then Wells Fargo sort of made a weak attempt at it. And then Jack Bogle at Vanguard left the Wellington funds, got fired, started his own company and said, I think I'm just going to make this index fund of the S&P 500. And he brought it to market. He wanted to sell $150 million worth of the index fund. And he only sold 11 million, and they called it Bogle's Folly in the media.
And why do we say you should own index funds? Here's why I think you should. If you own an index fund, you know what you own today, tomorrow, and the next day.
But in the past, the critics of them called that a guarantee of mediocrity.
Okay. Well, if you could be average, you'd be okay in this business. You guarantee yourself another thing, lower cost. Yeah. Actively managed mutual funds are more expensive. You guarantee another thing, tax efficient. They're more tax efficient than actively managed funds. Yep. And number 4, supported by evidence. You can actually say, here's how this index has performed for a very long period of time. Doesn't mean it's going to do that in the future, but here's what it's done for a very long period of time. With everything else, I use the word fugazi, but that's true. You have no idea what tomorrow holds for any active manager because they could change their philosophy. They could buy different stock, et cetera, et cetera. So with this, at least you know what you own and you get it cheaply. That's the way I think you should look at it.
And when Tom says these are supported by evidence, we're not just talking about any run-of-the-mill evidence. We're talking about evidence from incredible academics, scientists like Harry Markowitz, won a Nobel Prize, William Sharp, won a Nobel Prize, Eugene Fama, won a Nobel Prize. Index funds, they're backed up by almost everything. 855-935-TALK is our number, 855-935-8255. I'm Don. That's Tom. And we're just here for you, talking real money. A second opinion could save your life either physically or fiscally. Let one of our Vestory advisors help you save your future at Vestory.com, Vestory.com. Hi, welcome back to Talking Real Money. I'm Don. Tom's over there. We're talking real money. And, you know, one of the things that causes people to lose a lot of their real money are all these scams on the phone. I get them all the time. I go, it's a scam. I can tell it's a scam. And I can tell. And I do sometimes like to mess around with them. Sometimes.
Me too.
I think it's really fun. Yeah. Well, I just got this email from a neighborhood bulletin board kind of thing where somebody said there's a new scam going around. I've never heard of this one. He got a call from it said on his caller ID, Television Services, the California number. And there was someone online with just broken English. And she said, we've upgraded your TV service, sir.
Oh, yeah.
Now, I want you to go to the settings of your computer and give me your IP address. Now,
come on.
I don't know what they're going to do with the IP address, but I'm sure it's nefarious. So he said, I played along.
Gave him a random IP address.
No, it's even better. It's even better. He told her, my IP address is all letters. And then he went, okay, the first one is F as in Frank. The next one is U as in uncle.
Yeah, okay, that's good. How far did it go before they went, wait a minute?
She hung up on the second word.
Okay. That's good. That's creative. I got to say.
But the moral of the story, and this is what I think is so important, never give anybody anything on the phone. If they call you and ask you for stuff, no. The answer is no. If you're not smart enough to give them that answer or you're not quick enough, just no. No, I don't give anything out on the phone.
And don't believe it for a second when they call you and say your Social Security's in danger because blah, blah. I get that one from time to time.
Are you being arrested?
Yeah, it's like, come on, really? Yeah, you're going to call me and tell me that. Sure.
The police
come on by.
Our agents are coming to your house. They're on their way.
Right now. Mm-hmm.
I said, I'll have cookies baked for them.
By the way, they can come by as long as they don't have a leaf blower with them. I'm okay with the rest of it.
Yeah, everybody's okay. Everybody's better without a leaf blower, aren't they?
And that's coming to an end here very quickly.
The world
so
is
we'll
better
see.
without a leaf blower. His neighbor's selling his house. For those of you who missed that podcast update.
Unbelievable
Selling
price.
his
Well, we'll
house.
see. We'll see if he gets it.
If he gets it, then you're selling. You're just going to rent a
Probably.
damned apartment. I'm telling you.
Probably, yeah.
In a
I mean, it's
building,
ridiculous.
in a building with great internet.
And everything else. I mean, for that amount of money, they'll be massaging my feet morning, noon, and night.
You'll be down a penthouse looking over the lake from
I'll be
Bellevue.
flying private to do something. I mean, that's crazy amount of money. So we'll see.
855-935-TALK is our phone number for you to call in questions, but you can also send them to us like many do at talkingrealmoney.com.
Hit
as
me, man.
David
Hit
did.
me.
Here we go. Love the show. Love the show, he
That's
says.
nice. That's nice.
Buttering us up because it's going to be an involved question, I think.
Oh, okay.
Thanks for the great advice. I listen to every episode and have for over a year now.
Wow. Very nice.
I'm a high-income professional in my early 30s with a portfolio that is currently 100% in equities. I am 60% in the total U.S. stock market index and 40% international index. My portfolio is approaching $500,000. I'd like to add in 10% fixed income and then gradually increase from there. He's in his 30s. As I have not previously held bonds,
10%.
I know I know little about them. I have two questions. One, ready?
What the heck are they?
Yeah. Do you recommend
Yeah.
allocating any portion of a fixed income allocation to tips? I'm going to give them to you one at a time.
Oh, okay. Well, so is this in a qualified account or is this just in a regular brokerage account? I probably
He
be
didn't
not very
say.
Okay. So I mean, if it's a regular taxable brokerage after tax account, then I probably would not be in favor of using tips because they're going to be relatively inefficient.
Mm-hmm.
If it's in an IRA, for example, 401k, then sure, I would use tips.
Okay. Then he goes on to question 2. Is there a compelling reason to put bonds in a 403B versus a government 457 or vice versa? I have Vanguard Total Bond Market Index.
Oh, good fun.
Which available in my 457 and my 403. I have CREF Bond Market Account and CREF Inflation Linked Bond Index. The equity options in both funds are similar, so I'm not picking a better bond fund at the expense of my equity funds.
Just go with the Vanguard Total Bond. I wouldn't mess around with it.
I assume I should just go with the VBTLX.
There you go. Yeah, I mean, the other ones are going to be more expensive. I can almost guarantee it. They probably are trying to game things to make more right now when interest rates are so low, and they always act like they're not taking more risk to do that, but generally they are. Vanguard's product is going to be very diversified, very low cost, and operated, I believe, in a manner that will be more efficient than CREF's.
Yeah, and I'm looking at that.
10% of your portfolio is not going to make that big a difference anyway.
If I get rid of that, I'm trying to find it, the CREF thing. He gave me a symbol, but it's too many digits. It's too many letters.
Yeah.
Actually, to come to think of it, maybe it's not even a publicly available fund.
Might not be because, of course, CREF was set up for educators.
Right. Yeah, it is not a publicly available fund. That explains it.
Okay. I see no reason. And by the way, it's only 10% of your portfolio.
Yeah.
So we're not talking about a lot. And probably 10% in your 30s. Sure, that's okay. Give you a little bit of cushion in the next, big downturn, which, as you know, started last week and is heading into. No, I'm kidding. We don't know that it started last week.
Well, and that's actually a good follow up to this question.
Yeah.
The whole question of having bonds in a portfolio. We get a lot of pushback on that, because the talk is, of course, in all the popular media that this is the end of the big bond bull, and that it's all bond bear from here.
Okay, but let's talk about, and by the way, just look this up. I do use and have recommended we use for our clients DFIGX, which is an intermediate term bond fund operated by Dimensional Funds, which is down a whopping 3.9% this year. Whew, tough one there.
And wait. It's but bear in mind is that the total return? So that includes the income. Okay, so it's down about 5% or so, a little over 5% total.
Okay. So should I own something that's lost money? Yeah. Number one, if you're not going to own bonds, what are you going to own instead?
Right. What's the alternative? That's the best question.
It's not, by the way,
because
equity
people will
index
say
annuity.
it's alternatives.
Do not own an equity. Does an insurance product sound like as something secure as a U.S. government bond?
No.
Anybody who thinks that's my first argument. Okay. But so what would be the alternative is number one. Number two, bonds should be there for cushion, not for return. People have a tendency to look, that part of my portfolio is not making enough money, Tom. Yeah. Okay. That's fine. But it'll be there when the other part goes way down. So bonds should be in your portfolio.
Well, but again,
for
some
stability.
people will say things like preferred stock or high dividend stocks.
Wow.
Higher risk. You see, you've kicked the risk way up. The point of bonds is lowering the risk. 855-935-TALK. That's our phone number, 855-935-8255. We have lines open for you right this very minute. They're working, so you have no excuse not to call. And we'll be back. I'm Don. That's Tom, talking real money. Tom and I created Vestory to help everyone become a better investor, even those who will never be clients. Let one of our advisors help you start your financial plan or solve a money problem free with no obligation or high-pressure sales pitch at Vestory.com, Vestory.com. Hey, hi, welcome back. Shh, be quiet over there.
Sorry. Okay.
He's talking because there's no music, and he gets confused really easily. I, on the other hand, I'm on top of this thing. 855-935-TALK is our phone number. Give us a call, 855-935-8255. VBTLX, the Vanguard Total Bond Market Index, Admiral shares.
Yeah.
Year-to-date total return. This is not how much it's
that
down.
Includes
this is
the
total
interest.
Return, interest plus losses, negative 2%.
Okay, so let's just chat about that just for a moment, because some of you say, well, why would I want to be in bonds when they're losing money? First of all, they're not losing anything. They've lost money. Everything should be in past tense. Number two, compare that 2%, or what did I just say for DFIGX, 3.9. Compare that to last spring when I believe stocks were down, I don't know, over 30% in like 6 weeks. There is literally no comparison in losses between the two. So don't get caught up in this. I only want to be in the things that go up all the time, because nothing exists that does that. Other than Don's intellect, of course. Don't.
It's because I'm getting old.
Yeah, it's small and getting smaller. It's a silly notion. Bonds should be there, as I said, for portfolio stability, not to enrich you necessarily. And everybody in the world has a new product to sell you instead of bonds, because it's an easy story to sell right now, right?
Absolutely.
It's easy story to sell.
And
I'll take that.
That leads me right into the next question, which was sent into TalkingRealMoney.com.
Okay.
It really is totally connected. And this is coincidental. I am a longtime listener, really enjoy your show. I understand your position on annuities in general, but what's your thoughts specifically on MYGA annuities that are available? Are they a good alternative for CDs or other fixed income?
Isn't it Amiga?
No, some people call them MYGAs.
Okay.
Some people call them MEGAs.
Yeah.
It's a guaranteed rate annuity. It's for a certain number of years. That's what a MYGA is.
I need to know more specifically.
I have to find out.
It sounds like you know more about the product. I want
to find out what the latest yields are on MYGAs. Here's one.
Multi-year guaranteed annuity.
Yeah, 3%. Couple of problems with MYGAs. Couple of problems. One, as Tom mentioned earlier, who's guaranteeing the safety of your principal? The U.S. government or an insurance company?
Yeah, you make the call as to which one you believe more. I made my decision on that a long time ago.
U.S. government or an insurance company. Two, you are locked in with a MYGA. Now, you can get out of a bond fund at any point in time. The value may be up or down. That's part of the risks involved. But to say this is a riskless
not
alternative,
down by 2%. Oh, my goodness, I'll never get my money back.
With these, if you want to get your money out, you're going to pay a surrender charge to get out.
Oh, goodness.
Why? Because the money has to stay in the annuity for a long time for the insurance company to earn back the commission that they pay up front to the person selling it to you. And if the person selling it to you tells you there is no commission, they are a bald-faced, absolute, no doubt about it, liar. They are not just misleading you. They are literally lying to you, because annuities of all shapes and sizes that are sold through any kind of an agent have commissions. They must. That's the way they get paid.
And so what's the difference between this and an immediate annuity where you give the money to the insurance company, they start paying you back at a still relatively low amount of interest, correct?
Right. An immediate annuity is very, very similar, but the difference is with the MYGA, you can get your money back. Once you have committed, once you have, but if you get a 3-year MYGA, you can get a 3-year MYGA at a lower rate. The higher rates, the 3s are probably on 10-year MYGAs.
Got it.
So you're locking your money up for a decade. Whereas with an immediate annuity, you're giving the insurance company your money, and they're promising to give you a monthly income for the rest of your life. They're betting you die sooner than you think you will. And they're probably right.
They make those bets every day, and generally, guess what? They're on the right side of that bet.
They're always on the right side.
They got a lot of people working on it.
It's like a casino. If the casino lost more than it won, the casino wouldn't last
Las
long.
Vegas. Yeah.
Have you ever looked at the headquarters of an insurance company?
Nice place.
They're nice buildings. They're lovely. So it's two different things. It's a horse and a zebra. So give us a call, 855-935-TALK, 855-935-8255, or send your questions in at talkingrealmoney.com and stick around. We got a lot more coming up. Phone lines are open. I'm Don. That's Tom. We love talking real money. Want a free copy of my book, Financial Physics? Well, go download it right now at vestory.com, vestory.com. Just like that. It's like magic. Hi, welcome back to Talking Real Money. I'm Don. That's Tom. You're there. Thank you for being there. Call us at 855-935-TALK to talk about your dough. And we get. Excuse me? We get also get.
Is this going to be one of the Namibia moments or something? Yeah.
Okay. I am getting up there, and sometimes the mouth doesn't
stop
move.
It.
It's like I've been feeling like my brain is not firing on all cylinders lately. I'm going to take some more vitamins.
5-hour energy. Let's go.
I'm not taking 5-hour energy.
Okay. All right.
We got a question. Whoa.
By the way, if you ever wanted to talk to the two of us, this is the moment to do that. Right now.
Okay. Yeah.
Call us right now.
This one may go past the break.
Whoa. Okay. I got my little pen warmed up, ready to go.
Oh, you're not going to need a pen for this.
Oh, okay.
You are not going to. This is all about concept. This is high concept question.
Oh gosh. Okay.
Greetings, Tom and Don. Tom, Billy,
at least you got that part right.
Yeah. I am very picky with my podcasts, but yours made the cut. I enjoy your delivery as it's both educational and entertaining. I thank you for the content. I'm a huge personal finance geek and have read and studied for countless hours on the topic with the hope of entering that field one day more as a service rather than for the money. I am currently a 43-year-old Wall Streeter. Dude, I got 22 years on you. For the past 20 years that lives in NYC with a wife and 2 kids and a third coming. Well, congratulations, Dad. Just feel a slight backstory helps give more context. I'm a huge believer of low-cost index, geographically diverse ETF strategy and love the Paul Merriman Strategy 10 funds. Most of my savings goes toward this strategy, over 95%. I want to drop you a line regarding your views on crypto. I'm one that actively saves 20 to 25% of my income in a taxable account. I have an adequate emergency fund, max out my retirement. I'm confident in how I structure my accounts and challenge any financial planner to poke a hole in it. How's that for confidence? The bottom line is I'm an oversaver and I have my order of operations in order. Like order of operations in order. I'm not trying to be a solution looking for a problem, but I do feel like if one has their order of operations in check, they should be allowed to allocate a small portion, 1 to 2%, or even up to 5% toward riskier endeavors, private equity, collectibles, real estate, even crypto. Yes, even crypto. I know your message is to the broader masses that don't have their acts together. Little elitist. However, I do feel your message would resonate better if you put the disclaimer in that you're okay for one investing a small portion of one's assets if they have all their operations in order. I just like
I'm gonna stop you right there.
Yes.
You know what this sounds like.
This
is
where he's going to keep going. He keeps going on this. Yeah.
Okay, but I'll let you do. But this is the argument that index funds are okay for the little people. Mm-hmm. But us really smart people, the really sophisticated, we know better. Mm-hmm. We have some of our money in hedge funds because, wow, those make a lot of money. We have some of our money in private equity because that really cranks things up. And now that Bitcoin's available, I'm putting some of my money there because this is where the real money's made. But you little people, you people that don't really know anything about anything, you can just use index funds. It's okay.
It did sound a little condescending. But let me go on. He says, as mentioned earlier, I have no idea if crypto will or won't make money in the long run. And frankly, neither do you. However, your message would be better received if you stripped away your emotions of opining on it being an allocated asset at the expense of a low-cost index ETF versus an excess that may or may not make money because of whatever. Anyway, same story as buying a boat, sports car, trip, casino, whatever you want to spend money on. I'm happy to discuss.
Same as buying a boat?
Yeah, that's what he says.
Because the boat could sink, I guess. Is that what he means? The car could be driven off a cliff? I don't know what
he's basically saying. What he says is, I struggle with your binary hard stance on something like crypto. What if you're wrong? Don't strip that opportunity from someone. Okay, now I'm gonna take.
By the way, I see there are some things that we're just going to say are a bad idea.
Yep. And I think
I don't know it for a fact. Right with
I have never
heroin.
said I know it for a fact, but
no,
I am
99%
confident based on my. I've been in the financial business almost as long as you've been alive.
Okay, but that's not even the argument that I have.
Yeah, but I've got perspective. And every time I've seen something like this come along, it has been a disaster.
But beyond that, it's what is your money going to? Your money's simply going to the person who bought it before you. And then when you need to sell it, it's about the person, the greater fool theory. It literally is, because there is nothing to substantiate. In other words, when you buy other securities, there's actually something there. There is nothing there in this case. Zero. Purely speculation and speculative.
And there's really the rub. There is no reason for cryptocurrency. No reason. I have asked, I have begged, I have said, please tell me why. And the only answer I ever get from anybody is that it's the blockchain. You're not investing in the blockchain. You're buying air. 855-935-TALK is our number. I'm Don, that's Tom, and we talk real money. Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com. Hi, Don here. Talking Real Money, you remember that? The show, the podcast, the show on Como? You can call us if you want. We have a line open, or 3. Maybe 4. I don't know how many. I don't even know how many lines we have. 855-935-TALK is our telephone number, though. 855-935-8255. And Mr. Scott, you have a question. Welcome to Talking Real Money.
No, guys, I actually have a comment.
I like comments, too.
I think you guys do a great job. I've been with Vestory for a little over 2 years, one of your clients. Early on, a couple years ago, you told us how to figure out if a financial advisor was duly registered.
Yes.
And I hear you talking a lot about that on the show, but the information that you gave me to figure it out on my own was very helpful to get the ADV Part 2 and how to look at that. So I see you have How to Vet Your Advisor at Talking Real Money. One of the things that I found when I looked at it, and you mentioned it, is that you can also see the fact that they're not a fiduciary at times. And I just haven't heard you guys bring that up in a long time, so I thought I'd bring that to your attention.
I think that is a good thing. And you're absolutely right. Sometimes when we talk about something and we think we've covered it, we forget that it bears repeating. The information is very, very...
You guys repeat a lot of stuff.
Yeah, we do. Tom mainly.
That's great. Yeah. That's great. That's my only comment. I love your show. Keep up the good work.
Thanks so much,
thank
Scott.
you for the trust you place in us to work with us. That's a very kind comment. Yeah, this is I think we mention it a lot, but thank you for pointing out that maybe we don't. because we did start off the program talking about various types of advice, right? You could take advice from do-it-yourself sites, Paul Merriman we mentioned, et cetera, and then build your own portfolio, manage it. You could get help from a robo-advisor, or you could do more of a full service. This is the work that Scott just talked about with our company Investory, where we do the planning, we do the management of the money, et cetera, et cetera. So there's different ways to go here. But when you get to the full service part, it's confusing because everybody, and by the way, we talked to a guy on the Zoom call today. He said, I called this other firm and, oh yeah, they're a fiduciary, but they're also selling equity index annuities.
Well, then they're not always a fiduciary.
I know. I don't know how they can say that. But
well, they can say they are because they're an RIA.
Yeah.
But they're not all. See, the key word that they won't use is always. That's what you
100%.
need to say. Are you always required to act in my best interest? 100% of the time.
And it's a very large, the number, the percentage.
It's 1%.
Of the industry. Okay, I was talking about the other percentage. So 99% of the advisors out there are not 100% fiduciary advisors, period.
Well, and as Scott mentioned, one of the great ways to check them out, but it is ponderous, is to go to Advisor Info, and that's advisorinfo.sec.gov. And we have a link to that at talkingrealmoney.com/help. That's one way to do it. But then you have to read through their ADV Part 2. Do not try to use the Part 3 relationship summary to figure it out, because that thing is a disaster. That was the dumbest thing the SEC ever came up with.
That was a few years ago. They're going to make this easier. And by the way, if you get through the ADV and you still have time left before it's night, I have a copy of the Warren Commission report here too. I will send you as well.
But I'm going to use a company. I'm going to actually use a company by name
I think
as
that's
an
a good
example.
idea. Yeah.
There's a huge company that is a registered investment advisor. You've heard of them, called Ameriprise. Heard of them? They have an ADV Part 2 that is
duly registered,
91 pages long.
Yeah, I think you use the word ponderous. I think
91 pages long. Now, that's right there is a clue that you're probably not dealing with a 100% fiduciary, because our parent company, Apella Capital,
how many pages?
Has hold on, I want to double check, because I know how big ours was, but I don't know how big Apella's is, and Apella's now our parent. Their brochure is...
By the way, that's our brochure.
33.
And in the old days when it was Vestry,
ours was like 13.
I thought it was like 11.
They're a
12,
bigger company, so it's longer. But let me give you another. This is the easiest way of all. Go to their website. All right, are you ready? I'm going to go to Ameriprise.com.
Yeah, please do.
Okay, down at the very bottom, always scroll to the bottom of the page or close to the bottom of the page.
Yeah, okay.
Okay, this says, quote, investment advisory products and services are made available through Ameriprise Financial Services, LLC, a registered investment advisor. That means they're a fiduciary. However, the very next line says Ameriprise Financial Services, member FINRA and SIPC.
Which is what? What is FINRA?
The Financial Industry Regulatory Authority and Securities Investors Protection Corporation. Those two references tell you that you are now dealing with a broker-dealer too. That is how you know you have a dual registered institution.
Which is most of the industry, frankly.
Most. Oh, yeah. No, I mean Merrill Lynch.
Because everybody,
Merrill Lynch,
sure.
dual registered. Yep, Morgan Stanley, dual registered. Voya, dual registered. Edward Jones, dual registered. They're dual registered. So that means they're not always required to act as a fiduciary.
They can call themselves that.
Right.
And then from time to time, they will, as you would say, Don, change caps, take off the fiduciary hat. I think he's looking for it now.
I do. I have my fiduciary hat. There it is. And
your
then change
best
it
interest
to
hat to the merely suitable
cap. I'm literally putting on the caps. But they don't do that. You see, I think this should be the new law. Is that if
only because you want to sell those?
I want to sell these hats. Any dual registered advisor, any advisor anywhere should be required to wear a hat. when they're working with you.
My hair looks good. I'm a TV guy. I work hard on it.
But you have to tell them you're always acting. Whenever you're acting as a fiduciary, you have to wear the best interest hat. If you ever drift over into the best interest standard, into selling product, you have to wear the red hat. Red hat.
I noticed the Merely Suitable is red. Just to point that out.
It's a red baseball cap.
So, no, I mean, this is
no political statement implied.
None whatsoever. Scott raises a very good issue. And that is, if you're just going out into the world to find somebody, most people want the security of hiring a big firm, right? Because they, like you just said, Ameriprise, Merrill Lynch, et cetera, because these are huge national firms. I feel some security around that. That is not the right thing to feel.
I'm going to give you one last quick question before the break. This is really short. I don't know if you know the answer or not. You don't know what the question is.
Blue. I'll go with
But
blue.
it's about the Washington State capital gains tax, which I know nothing about.
I do know. It goes into effect the first of the year, and it's 7%. That I do know.
Does it recognize a step up is the question. I don't know.
Well, what do you mean a step up?
A step up in basis at a death. You know, like at a death.
Well, it's not an estate tax.
No. But the U.S. capital gains rate, if I have a piece of property and it's appreciated, they step up the cost basis. I would imagine
at the time of someone's died, but that doesn't impact the capital gains tax. The great state of Washington. No, it doesn't. How?
If I have a house that I paid $100,000 for, I die.
This doesn't apply to real estate, by the way.
Okay, I have a stock I paid $1,000 for, and I die, and I leave it to you. It's worth $10,000,
and then you sell it.
Right.
Yeah, of course, because that would have gotten the stepped up.
Right,
Correct.
because it's going to be based on the federal.
That's
returns.
Right.
Yeah,
yes, that is correct. Yeah, and by the way, there's an initiative on the ballot that I think is like next week that would be overturning that or affirming it.
I'm Don. That's Tom, and we just hang out talking real money. Set your course for a great future with a free copy of our 60-page Better Retirement Guidebook at Vestory.com, Vestory.com. Hey there, welcome back. Talking Real Money. Been a unique day, been a very unusual day. One of the more different shows I've ever done without the music. Hopefully everything will be back to normal next Saturday when we do the show again on Como Radio and then turn it into a podcast like I'm going to do this weekend for Monday and Tuesday, because I do that every week. I take the Talking Real Money program from Saturdays. I turn it into a podcast that airs on Monday or Tuesday. So if you miss some of the podcast or the radio show, you can go listen to it as a podcast. And if you just want to hear it again, you can go listen to it as a podcast. Plus, you can listen to a lot more. Plus, we have video casts on YouTube. We've just got all kinds of ways to listen to, watch what we do, because we're trying to educate everybody everywhere all the time. So please, please, please tell more about the show, the podcast, spread the word. And if you need more help, if you have this big stack of statements and you're feeling massively overwhelmed because you really don't know what you have, how they properly relate to one another, what you're paying for all of these things, what they're going to do for you in the future, well, we'll let you borrow one of our fee-only 100% fiduciary advisors. We'll let you borrow one. Half hour, 45 minutes, maybe even an hour. You borrow them. No cost, no obligation, no high-pressure sales pitch. Guaranteed. You can call and set up an appointment at 800-386-3004, 800-386-3004, or you can set one up right at our website at Vestory.com, Vestory.com.
Talking Real Money. We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.